Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up, and we are now on Thursday evening, and we're after 6 p.m. Central Time, and this is June 11th, 2020, and a big break in the markets today. So the question is, what happened? And what happened was pretty simple. We saw the FOMC statement yesterday, and the market didn't react well to it yesterday. Then, because of the time this happens, 1 o'clock in the afternoon Central Time, the statement, press conference, 1:30 p.m. Central Time. If you think of the times in Asia, middle of the night, then you're coming back to Europe, and they feed off what happened in Asia and America. They start the spiral, and we walked into a market that was lower this morning. Certainly nothing like how it kept feeding on itself throughout the day. But let's think of what we came from. This market was the never-ending rally market. Since March, and I think you realize that, and I've said it reminded me of 2009, reminded me of 2015. Bad news was bull news was bull news. The market now got a dose of reality. Probably the kiss of death was that all the day traders, these Robinhood traders as they're called, Charles Schwab, these zero commission TD traders that had not a real lot of experience, but they saw, boy, if you buy it's going up. Boy, if you buy it goes up. Even a bankrupt company like Hertz, away you go. Well, they're getting their dose of reality. If you're like me and you got the gray going here, you've been through this show. We've seen it. It's not at my first rodeo. We know when you're opening thousands of accounts like that. I mean, I think it was millions. There's only one ending for it. A lot of those people have to learn how to lose to be better traders. That's how you learn. You don't learn by winning. You learn by first losing, doing a lot wrong, and then it comes to you. And that's what I try to help you with here. We're getting a bounce tonight. No, it's not a turn. We don't know where the turn's going to happen back to the upside. What we know is the market just entered a correction phase. How deep it goes? Well, we'll take a look at that now. Why did gold fall with it? Well, first of all, gold was up $19 today. So it's giving back $5. It didn't really fall. Let's understand that. Metals can give back a little bit here. They were on the run to the upside. Energies were on a phenomenal run. And I kept telling you, I said, just think, in the Permian Basin, just think of yourself coming out of a sewer. You're looking around and you're going, I can produce oil and make money now. I'm going to hedge and I'm turning on my spigot. That's what happened. So let's take a look at what we've got here. You had a heck of a run, never a look back. And by the way, you still haven't made a lower low on a closing basis. For the week, you are down going into Friday 167 points. Okay, a correction. We haven't seen that big of a break in any of these areas, but we didn't get this high either. Number two, what does the daily chart look like? That chart was just a weekly area chart of closes only. Now we're going to the daily charts. And on the daily charts, if we take a look, you now have a pattern of a lower low and a higher high. And it all happened today. I'm the first to tell you, the market until today still had the pattern higher lows, higher highs, right? Now you broke through this low, so you've left the uptrend. It was a nice trend, and it was a heck of a run from right here. It didn't look back. Where did the market go to? The key moving averages. You went down, got under the 100-day average, okay, but that 200-day average that you spent all this time over, it's being challenged again. But once you get through it and you fought a battle with it here, what was resistance on the way down often becomes support. And that's what you found, some support in the market right there. What about the Bollinger Bands? I've told you time and time again, this market acts with the Bollinger Bands like a fence. This is your resistance point, and there's nothing wrong with the market hitting it and just running it. That's a bullish sign. You don't know when it's going to end, but that's the reason you have stop orders. That's the reason you don't have blinders on. You just don't know. Yesterday, I was telling my traders, they were asking, do you go through reports in my newsletter? And I said, no, I have a philosophy. Futures, ETFs, spiders, they're trading vehicles. They are not, in my opinion, investment vehicles. Individual stocks are investment vehicles, not these. These are trading vehicles. And who said you can't go flat? go neutral, see the reaction to the report, and take a look. You're not going to beat the algos when the report first comes out either. Okay, so we're in a correction phase. Momentum is turned down. The bias is down. You're no longer in a trend. You have a higher high and lower low. In the NASDAQ, you are still in an uptrend. This has been the strongest market all the way through. Now, the break today was rather severe. I mean, I don't consider in the NASDAQ a 470-point break small. It's a monster. You rarely see these size breaks. Go run your chart action, you'll see what I'm saying. But often, I tell you, keep your eye on that line in the sand on the chart. The neutral point's the 18-day average of closes. And that's where the market went. What does it often do there? It puts its hand on its chin and says, what do I want to do next? That's what I think you're doing right now. Because you lost the embedded reading, you have to work out of an overbought condition. So consider the market right now overbought, still in an uptrend, or is it? Watch this. You've been in a pattern of a lower low and a higher high. You haven't been in an uptrend. You've been in a run. A phenomenal run that was due in large part to the slow stochastic staying embedded. They lost it somewhere along the line today. I expect the pros got out of the market and they're doing this. Okay, nothing wrong with that. You know that at the top of a market, you're going to give money back. Now you're going to say, Ira, it's a top? Not what I'm saying. A trade top? Yeah, you made a trade top in these markets. A top? Not smart enough to call tops and bottoms. In the Dow, you came down and took out this low. Now you ended up going back to you came back to the 18 and the 100-day average, and you slid right through the 200. Now one of the things I think I even mentioned yesterday, if you start breaking, the 200 will be the first number, and I'm pretty sure I would have said something along the lines, you know, you don't just go through a 200-day average like it doesn't exist, like, boom, you don't even matter to me. You often pull back, and that's what you're in. You're in a pullback in the market. You haven't entered a bear phase. You've entered exiting that dream phase where this market came from this March low and just ran forever. Valuations didn't matter, am I right? Nobody cared about that. Everything was going to go up. Company goes bankrupt like Hertz? So what? We'll buy it anyways. It'll double in value. Yeah. The Russell. This has been the weakest of the indices. I've been pretty consistent in saying that. The NASDAQ, the strongest, this the weakest. So this market gave up everything today too. Now, it went back to the 100-day average. Could go to the lower Bollinger Band. All these markets can go from these upper bands to the lower bands. Do I think we're into a crash? No. I think the market's into a correction. There's a big difference. We still have to see what happens with these new outbreaks of COVID. If these new outbreaks really start picking up dramatic movement, and in Houston, I hear that the mayor is considering putting down the shut-in again. In other words, closing it all down again. If that is the case, and if other cities do that, we have a huge issue, and you know that. That could set this market back down sharply. I've said that from day one. I didn't expect it would happen this fast. It has happened this fast. I was down today by the Board of Trade. I did not go in the building, but I was literally right there. Loneliness, right? And I'm looking around. There's nowhere to eat. The coffee shops, there's a few open like Starbucks, but not all of them. McDonald's is open. All the retail stores are closed. All the bigger restaurants don't have outdoor space. They're all closed as well. It is very difficult. You're not going to see people there right away. That's my point. Traffic is picking up in the suburbs and like nothing. I mean, it's really, the suburbs are where action is different. In the city, it's different than that. It's very, very quiet. So in these markets, let the correction run its course is what I'm telling you. In the VIX, again, it worked. I told you, and I've been saying each day, I think the pros wrote puts in this market to get back to these moving averages. And I've been watching it, and the market was playing with it. This is yesterday, and I'm sure I would have said along the lines, I'm expecting this to be hit, and I think they'll take their profit there. And I do think they did. Wonderful. It went even higher. Maybe they held on, I don't know. But whatever it is, again, each time you've been hitting these low numbers on the Bollinger Bands, they're allowing you to get back to these key averages. If you want to play they're going higher, that's up to you. I think the pros don't. I think they play the odds, and that's what I think they were looking for. Now in the T-bonds, we've had a nice run, but you still haven't taken out these highs. We recently had a downside breakout because we had these lows that were the lower part of the range outside of that. You have to get back over these numbers on a closing basis for me to say false breakout. I'm not saying it yet. I'm saying a bounce in an overall bearish market. I'm going to say the same thing in the 10-year. Prove me wrong? It's terrific. First of all, it's too hard to be short these markets. Why would you go into the Fed meeting yesterday? Rule 1, you don't. Now you had no reason to be doing anything, and you still don't. I think the pros are sidelined right there in some of these. In the dollar index, if the market reopens and loses the embedded reading, you may get more short covering in it. There was certainly, with the panic that hit, people running to the strongest currency. They ran to U.S. Treasury instruments. They ran to the dollar. Is it warranted? That remains to be seen. Markets have a way of evening up on Fridays. Eurocurrency. The market gave back an awful lot here. It's still embedded. Tomorrow's going to be a key day in the market. Does it hold on to that, or does it back off here? A good rally keeps the market embedded, and this was no more than a correction at this point. Somebody knew something in the end. Why did this market, forget today's action, why did this market just go shooting up and continue? I don't know what somebody knew, but it was a heck of a trade. Somebody, I think, knew something. I don't look for the yen to be able to get much over the upper Bollinger Band. You'd have to get, as I said, these COVID cases out of control. If that happens, I don't know how high is. So that's what I think you have to be watching now. Bitcoin, not in a trend. It's just in what I call this wider pipe, if you will, this sideways action right now, back and forth, let it do its thing. This is where traders get chopped apart because you don't get duration of up or down when you go sideways like that. Brent in the WTI crude, differential $1.85, and both got creamed today. And the markets, if you look at them, let's look at this is the close of business yesterday. And you're 81. If you start losing that embedded reading, traders are going to get nervous. What else would I have been selling you? A lot of resistance between the 100-day average and the upper Bollinger Band. Today, right back down when you lost the embedded reading. I call the market back to neutral right now. WTI crude, same thing, but let's take a look at yesterday. This is the close of business yesterday. It caught in between these numbers, has had a heck of a run, just sort of like stock market. Ran with it if you think about it from March. And you can come back here and you'll see. This one actually did it in April, but it was a very similar run, and now that's over. Is it going to go into bearishness? I don't know. I know that there's a reason not to be long, and that for me is enough of a decision. Gasoline lost the embedded reading right back to the 18-day average. But you had more than that because you had a market that took out this low right here. And when that took it out, now you have the lower highs, lower lows, and you're getting even further follow through the 18-day average because you lost the embedded reading. That's what I think at least. Nat gas. You had one challenge this week to get under the Bollinger Band. You know what I'm going to tell you. What do the pros do? I think each time that happens, the pros take money off the table. Yes, I am assuming when the market is under the 18-day average and the swing line is down, I think the pros are short. That if it hits that number, and I don't know if it'll hit it, but if it does, that's where I think they take money off the table. Pros can be algorithms, traders with experience. I don't know. But if you watch the phenomena to the upside or downside, you see it over and over, and you start to recognize it. Now, if you're not keeping up with the markets the way that we do, you might want to. If you don't get market research, get it. We put it out throughout the evening and throughout the day. We have a whole team of writers. So if you'd like to see what we do, I'm talking the staff at Linn Associates, go to our website, sign up for our free offers. It's that simple. You'll see it right at the bottom right of the website page. You can click up here to get that, and you'll see our charting software, our other offers, our trading techniques. In other words, Modern Trader, the different pamphlets on volumes 1 and 2 of technical indicators. Take advantage of it. I'm Ira. I'll see you all tomorrow.